Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Wednesday, January 23rd, 2008. Well, today was an absolute insanely wild day, and there's no other way to describe it. There's a ton of things that went on today, but ultimately there was a difference between the wild day of yesterday and the past 2 weeks and today. And that would be we closed to the upside in a great reversal of trend to close with a major rally in the market and in the indexes. And we're going to go over that in the intraday chart, and I just want to get right into this because it's so important and it's very key we go over this. Alright, now let's talk about yesterday before, and you're looking at the ES futures chart here, and this mirrors the S&P for the most part, except it trades 23 hours and 45 minutes a day, so it gives us a pre-market view of the chart as well. So again, you can see here we're going all the way back to about 4 a.m. in the morning, and this is Eastern time in this chart, all the way to present now, okay? So let's talk a little bit about this chart and what happened yesterday. Yesterday, the futures pre-market before the open and yesterday were down about 600 on the Dow. A huge drop. The NASDAQ was down over 100. It looked like we were going to get that capitulation move, which I was talking about in yesterday's video, which was so key to bottoming out before we could bounce in yesterday's action. Well, the Fed stepped up and kind of halted that from us, unfortunately, and I know they meant to do us good, and I'm sure they did do us good by cutting the rate, at least in the near term. You guys know I'm not a huge fan of the long-term implications of these rate cuts because it's going to cause so many hardships later on, but in the near term, they're trying to save what's going on, and I can appreciate that, and I can appreciate the need for this market to bounce. A lot of people getting hurt out there, and I hate to see that. Now, the Fed came out and basically halted that capitulation move. The futures rallied a little off that, ultimately closing the day yesterday down on all indexes, but off their lows. So it wasn't a big down day. I mean, it was down, but not huge like the Europe market had been or the Hong Kong market had been. Well, yesterday after the bell, Apple Computer came out with earnings, and the earnings were not good, and the stock got crushed. And in tune with that, the futures also took a hit. And the futures dropped pretty substantially, and again, last night and this morning, the futures are trading down. And that leads us up to this chart right here, leading us into the day. And you can see here the futures continue to fall all the way from 4 a.m. to about 8 a.m. All right? And what happened here was at around a little after 8 a.m., about 8:30 a.m., we had a flush out. And this is what I believe was the capitulation move on the S&P futures chart. And it varies on the NASDAQ. And this is something else I'm going to show you, which I find very key. All right? On the NASDAQ, it happened later in the day. On the ES, this is where it happened. You got this huge sell-off on heavy volume for pre-market action. All right? And hang on while I get my chart back there. All right? And here we are again, right here. So you got this heavy, and look at it's heavier volume. For pre-market, that's good volume, by the way. That's very heavy volume for that early in the morning. And you got that tail, and then we rallied all the way off that low to close up here. Now, what does that mean? Well, the bottoming tail as a technical side of things is a very bullish sign. And what you want to see following that is you want to see a sideways or move up following that tail. And that's exactly what we got. We got the sideways trading pattern, and then a big push up. And I'm going to draw this in here, and I'm going to show you guys exactly what's going on here. We had this fall, then the move up. And the rally took us all the way through these key moving averages. And that should be the first signal of the day that there was strength out there in buying. On heavy, heavy volume, look at this right here. Heavy volume, you had all these moving averages just getting obliterated. There was no stopping them. It wasn't like we bounced off of them and moved to the downside. And you had that, and the stochastics rallied all the way up here, all the way to their top here, and then we needed that pullback and consolidation, and kind of a double bottom. So what we had was a pullback, but notice the volume, and this is key. Look at the volume, all right? Here we go on the volume, right there. So on that sell-off, it wasn't like we had heavy, heavy selling. There was decent volume there, but nothing to the major effect of what we had seen on the buy program. Now, what happened next? We had another bottoming tail formation here, another tail. It was almost a double bottom area, and what I'm going to show you here is if you take a line and draw it straight across, right there, you actually hit it. So the lowest close coincided with the bottoming tail right there, and what did that yield? Another buy program that lasted all the way up to this point. All right? And the significance here is that it again obliterated all these moving averages. And the volume stayed decent but in the afternoon, but it was relatively light. But this is where the interesting part gets. We get the 1-2 pullback, the touch of the 200 moving average right here, which is the green line, and a boom, an explosion to the upside, which basically, if you look at this chart pattern, and I'm sure a lot of you have noticed this already, what I'm drawing to the conclusion here, not only that, but look at the volume again on this buy program. So you had a major buy program here, a major buy program up here, volume heavy, okay? And look at the pattern again, W, V. All right, you get that little pullback to form the V and a blast off to new highs of the day. And I really wanted to focus in on that because it's so important. Well, now let's figure out what's going on here, because we had a major reversal. The Dow was down over 300 points at one point today and up at the end of the day about 300. The NASDAQ closed up 24 points, and the NASDAQ was even under pressure because Apple Computer was down so big. All right, the major tech stocks got hammered today even with the rally. So while the NASDAQ was up 24, stocks like Google, and here's Google's intraday chart, which is off its lows but still down, was down 36 points today. Apple Computer was down 16.5 points and even well off its lows because of the rally. So what my point here, folks, is that the market, the NASDAQ was still positive, which shows great strength, even though Apple, Baidu, Google, and Research in Motion, the four horsemen in my book, were still negative. So that's showing good surrounding strength in all other areas of tech. And that's key, guys. And you guys know I've been pounding the table saying we should rally, although in many instances we needed that flush out, and that's exactly what we got today. Now, I mentioned before we saw that flush out on the ES chart right here early pre-market. Now, where I mentioned that it was different on the NASDAQ, and let me show you here. The NASDAQ happened right here. So while the ES and the futures chart, it happened about 8:30 in the morning over here, the NASDAQ did not get its flush out till about 1 p.m. And look at that bottoming tail on the intraday NASDAQ 10-minute chart. Right there, that tail, and then off to the races. Look at that rally, all right? And if I could show you intraday volume on the NASDAQ, you would see it was insanely heavy right here. You had a major spike down, a retrace right back up, a close in the upper areas of that candle, which is a very bullish sign, and then off to the races to the upside. All right, now let's look at the daily. We noticed yesterday that we had come off the lows dramatically. In many instances yesterday in the videos, I specifically said we still need this flush out, we still need to retest. That's exactly what we got today. You see we actually broke the low of the yesterday's candle on the NASDAQ, getting to 2202, which the 2200 level is very significant as a psychological level for the market. So again, we got to 2202. We did not break 2200 on the NASDAQ, and off to the races we went, and we closed higher than yesterday's close, which is also significant. Now, the big question is going to be, well, where do we go from here? And I'm going to say this, and I'm going to use severe caution because of the nature of this market. Bear markets are notorious for having big bounces in a very short amount of time. So if we do bounce tomorrow or the next day, be ready to exit the market quickly. All right? We could bounce 100 points on the NASDAQ in a day or two, and then before you know it, be back to the lows. So I do really want to stress that. You got to be careful in this market. It's not an easy market to make money in. It's one of the toughest markets probably since 2002 when the tech bubble was crashing down, and you got to be super careful. Okay? So there's the NASDAQ chart. Now the question is, well, where do we bounce to? And I want to stress this again. I happen to think that we're oversold, and the charts are showing that, and that's how I think it is because you had a lot of bears out there. Trust me, today in the media, bears were out in full force. That's signaling that you possibly near a bottom. You had the VIX 2 days in a row over 30, in the mid 30s almost. That's another thing, and that's the volatility index, which tells us that. But at the same time, don't discount this market. One little thing happens, and I stress this. One financial firm says they're going under. One earnings report is horrible again, like Apple, and we could be back to the lows immediately. So again, I stress, be careful. Now, let's talk a little bit about where we could go. Now, you have the 20 moving average here. You guys know how I felt. On the way up, I kept stressing that we were going to come back and touch that 20. We did. We broke it. We touched the 200. On the downside, the same rules apply. A severe bounce, and this would be a ginormous bounce, could take us up to this 20. Now, it would probably be the 20 at that point when we got up there would be around here, but nonetheless, you could see that rally. Now, that's the point if we bounce. If we do not bounce, or if we just bounce a little bit, it could be anywhere in this area. My guess, somewhere in this area. I do favor a bounce to the upside, although I've been wrong before, guys. You guys know. You guys have been with me in multiple videos. From time to time, I am wrong, and I will admit that flat out when it happens. But keep in mind, stocks are extremely oversold here. After hours, there were some decent earnings reports from Qualcomm and Symantec. eBay reported as well, and they're trading down quite a bit on their earnings report, although they did, from what I heard, announce a large buyback of stock, which may help the stock. All right? Let's just take one more quick check of the SPY chart here on the daily, and you can see that major reversal today. Again, guys, the fact we were down so much and reversed to the upside, you have to take that as a bullish sign, and I would guess that Asia will rally tonight on that, and Europe will probably rally late or early in the morning tomorrow, and we may see a positive open tomorrow unless, and I stress this, unless there is a negative report that comes out from a financial firm or one of these other firms, then watch out. Have a wonderful evening, guys. We'll be back tomorrow. Lots going on. Be safe, be careful, make money.